Top three things in my notebook this morning. Not surprisingly, the 10-year bond yield, number one. Number two would be the financials in the U.S. stock market. And then number three would be commodities. So first on the 10-year bond yield, again, we're looking for the point of entropy. We signaled the point of entropy. If you don't know what entropy is, now you have entropy. So again, tail line, tail risk line, this is how we think about entropy, or points of surprise or points of risk, the waterfall, if you will, is of course 261 on the 10-year bond yield. So when that broke, we started to talk about the tail risk associated with that. And again, the tail risk can move to the upside in bonds and to the downside in bond yields, and we got that move. So again, what does this signal? It explicitly signals that Hedgeye is right and that U.S. growth continues to slow in the face of inflation accelerating. Now, point number two, what do you do with that? When bond yields fall, what do you not buy? A financial. You don't buy the financials. Look at the financials. Look at Bank of America, JP Morgan. Look at any of these charts. They look like bloody hell because, of course, so does the 10-year bond yield. So what ends up happening is you get what we call yield spread compression. So the long end of the curve comes down. The short end of the curve is marked to model by the Fed. And what you get is NIM compression. So again, it's bad for the financials, and that's why the financials are down for 2014. And it is May, by the way, 2014 year to date, which doesn't quite agree with the Abby Joseph Cohen forecast. Commodities, finally, if you had this on, congratulations. Commodities, the CRB index, which is 19 commodities, is up 9.6% for the year to date. If you're long growth, which is the Russell 2000, it's down 5.9% for the year to date. Inflation slows growth. Time stamped. Those are your top three things.